Exchange traded funds and index funds are like all the hype of the stock market now, other than Tesla and it's booming and things like that. But the last decade or so, exchange traded funds are a collective of businesses, and index funds is just a collective that try and match the S&P 500 pretty closely. They seem to be performing really well and everyone's noticing, and they're currently the second most traded category of stocks out there, behind technology, including being in front of finance and a lot of very big categories when it comes to stocks, a lot of different markets. So they are surely here to stay and making a big impact, but do they really work? So I'm here to review my last year. I've been investing consistently every single week at a little bit of a varying amount, between 250 Australian dollars per week down to as low as 50 when I first started, or more so about 100, between 100 and 250 dollars. And we can't always be as consistent as we like, with lockdowns and everything. I had to cut back a little bit on my investing. Thankfully, not at the prime times. And when I was at its lowest, I was still putting in as much as I could. And that's generally the way to go about it. Because if you just invest the same always, you're going to get these deals, right? It's going to go up and down, but that's good. That's beneficial, because the more dips there is, the more shares you will hold in the long term than if the market was just a nice, steady, consistent rise like this. This is what everyone wants to see, but when they actually look into it, it's not, because you don't buy anything of great value and then you have more shares in the future, which when it's valued at a higher price in the future, which it pretty much always will be unless it crashes for some reason, then you actually have made more money. Hopefully that makes sense to you. So don't stress, first of all, with ETFs about the dipping and rising. But do they work? Let's reveal how mine went. I've shown it a few times in different videos, so a lot of my few subscribers, I've made a few videos here, will have seen this already. So if you want to be one of those people, then you can always smash the like button to show YouTube that you're interested in this kind of stuff and learning more about the financial market. Plus you can subscribe to see future finance videos from me coming up. So I'm going to be completely open with how my investing went here. So current balance is $2,250. The return though, that's not how much I've invested. This is Spaceship. It's a business that started 2 years ago. I saw an opening because it's a new ETF to the market. I really liked their strategy, how they're explaining how they're going to go about it. Their list of 100 businesses were well handpicked, I thought. They're trying to chase where the future is going, but also having some nice safe stocks in there. So I really believe in the company. There's going to be many businesses out there. Vanguard, for instance, huge business, have many different openings, and they all have pretty low fees as well. BlackRock do a lot of Australian shares and things like that. But nice little company here, breaking into the EFT market after starting as a superannuation business. So look at the performance. The shares are now, you're not going to be able to see that too much, but you can see the upward trend. I think that's all we care about when we're looking at the stock market. So I started buying, and this is the thing with stock shares, right? You're like, these come out at $1 and then went down to $95. And then I started rising back up. Now, I didn't find out about the business and start investing until about the $1.14 price range. Now, since then, these are trading at $1.70, and who really knows how high these will go. I could be making a video in 10 years' time talking about how these are now $7.50, how they're now $17.50, how they went back down to $1.50. It doesn't matter, because ETFs are such a great way. We'll revise again why that is. We've got nice, strong growth because they hold a collective of businesses, and if they make smart choices on businesses that grow over the long term, big blue chip businesses, then they're probably going to see some type of upward trend, maybe not that aggressive. They also pay dividends, every 6 months or a year, or how often they do that, because any businesses that they hold in there may pay dividends, and then they distribute them to you as well. Plus, the fees are very low, and it's just an awesome way to go about it. Warren Buffett himself explains that everyone should find a nice ETF, invest in that, because you take the guessing out of it, and you don't have to buy and sell single stocks. You don't have the capital behind you to do that, then this is the best way to go about it. And most of us don't have the trillions and billions to invest in huge amounts of single-off businesses in order to make their own so-called ETF. So this simplifies everything, and it's closed on me. So it's $1.70 right now. Performance for 1 year, not gonna work at all, I'll just tell you, is 50.68%. If you were to put in $100,000 into this business or this ETF here, 1 year from now, you would be now on $150,000. Not bad at all. Now I've only put in a current total of 6,000 units, okay? I've invested $7,850 and I've had a return of $2,357. So in my experience, I don't think there is a better way I could have invested that $7,000 because now it's $10,250. Dividends have just rolled around, although it wasn't very high because the lockdowns really hurt it this year. But I mean, we've seen strong growth. The S&P 500 is hitting its all-time highs. This is really feeling it. Like I said, look at that graph. See that little dip? That was the lockdowns. That is all that impacted it. Now, of course, this includes my weekly investment of $100 to $250. But through that and everything, it's now just rocketing up. This will be probably double the value in next year's time, and then the dividends will also be higher because none of these businesses. Let's go through the portfolio first of all. So the top 5 exposures, the ones that hold the most value in this is Apple, Microsoft, Adobe, Amazon, and the Alibaba Group. We've also got A2 Milk, Activision Blizzard, Afterpay, Align, Alphabet, everything. And then you can see green arrows. Sorry you can't really see that, but I can maybe put some screenshots up. Either way, really good. I highly recommend ETFs. I think all of the Vanguard shares, most of them anyway. VOO, if you want to look at Vanguard, the biggest business in the ETF game. And also BlackRock, worth checking those out. But I think their fees are a little bit higher. This is 0.05% after you have $5,000. So this company I use here, and the link is in the description if you want to check it out yourself. It's for Australian investors. Or if you want to buy your own ETFs, I'll link some in the description below that aren't this guy's, like the American shares, Vanguard, things like that. And you can purchase them through stake and also have no transaction commission fees. You can just buy in to the shares. But in my experience and everyone else that I know, ETFs are making a big impact because yes, they do in fact work. It's a brilliant idea of how to go about getting to the share market, and from my experience there, I've done a lot better than most. So everyone's skeptical when they first start, but if you put in $1,000, or even if you put in $5, so these guys do, if you put $5 deposit in, you get $5 or $10 back. Okay, that's the link I'll put down in the description for you. I try and tell my friends and things like that, like just try it out, put $5 in and see what happens, because then you get comfortable with investing. You've put in your $5. If you lose it all and it is a scam for some reason, which I mean, I guess everyone's got that in the back of their mind because there's so much selling and marketing in today's age, then fair enough, okay, it's not for you, but it's $5. So you can just try it out, see how it goes, and there's no real downside. You don't get scammed or anything. It's just try out ETFs. They really do work. I've had 50% return on my investment. My husky is telling you guys that he thinks they're really good also. And yeah, there's my first-hand experience with ETFs. Hopefully I went into enough detail for you guys on exactly how they work and why. I'll put a little bit more explanation for text reading if you want the description below. And honestly, what experience you guys had in the comments. So tell me if you invest in ETFs and how you've been going. I'm sure some of you will invest big bucks and you've seen even bigger returns. So thanks for watching, guys. Be sure to leave a like if you found any of this video interesting, and you can always subscribe for more future finance content. Whoa, what are you doing? I will see you guys next time. What we thought. See you next time.